Wait, you sold 1,000 shares, but you have like.
Well, this is good. This is actually part of the podcast.
I'm recording now. I'm recording now. So yeah, you're talking about how I sold a bunch of shares. You sold like 2 shares, then you're like, I got to buy 10 now.
Part of investing is obviously sometimes you make a mistake. I felt uneasy even when I sold it at 440, and then I felt really bad when it went to 9. Then obviously, there's some regret and greed. There's FOMO, all this stuff that plays into it. But I was like, I didn't really want to sell at 440. I was more like scared that the market would tank, right? So I was like hedging against the market going down, and the market.
Hold on. I have to stop you right there because I could pause this and go back in time to one of our previous videos where you're like, I'm gonna hold for 5 years.
No. I am holding my three quarters of my shares. I am holding,
right?
But I sold a little too soon on the 440 because I did double my money. So let me not be crazy. I did double what I bought it at, which is roughly $2, right?
The question is, the shares that you sold, that tax lot, what was the percent profit on that tax lot?
100%.
All right.
Like and subscribe.
Like and subscribe.
All right.
Have you done a calculation of where you would be if you left the shares alone versus what you did, which was sell and then buy them back? Now you have a bigger position.
I did. Yes. I don't have a bigger position. I
bought the shares. You bought the shares.
I bought a piece of the shares that I had sold.
So you have. So right now you have a slightly less shares than you would have had, but you took out some profit.
Yes, I still have some profit. Yes.
Right. I mean, it's all about why you sold. That idea of the FOMO.
This is good for the episode and good for people because we all make mistakes. Sometimes we're afraid that we're going to lose our investment. And
but if it tanked to 69 cents, the title of this video would be like FUV. Vitaly's an FUV genius. You read the market and sold right before it tanked. You know what I'm saying? This is a chance to talk about trends because what you experience that moment is what a lot of traders feel, but it happens so rarely that you don't get a chance to practice it, right? But if you understand the markets, or if you understand that these things are trends that are going to happen, you won't be taken by surprise by them. This was a stock that was, if we just go like a year, so it was kind of floating around between $1 and $2, and then they had this big ramp up. The people that sold out up here were all these people. It's all those people that waited patiently. So when you see a stock that you're holding on to for a while, when you see a stock, especially a stock like this, it's been trading up and down $2. I mean, look, this is like months of people's lives. August, September, October. I mean, these are people holding this stock, waiting for it to pop. Now we're here in May, in the middle of a pandemic, and then it skyrockets up to $7. You cannot blame those people for saying, okay, I held on for so long. Maybe they took out a big position and now they've dropped the stock down to $5. You as an investor that's coming in here, that came in around here, you joined the party late and you're trying to catch up to everybody else who's already drunk. You know what I mean? Like, you've got to have your own pace. So maybe the idea is if you purchase a stock like this, maybe you understand that when that initial run up happens, it's only going to raise the shelf, the new this for the next level that will pop up again if they have a bunch of good news, if the market goes up, if the industry goes up. So maybe when you see that, the next time you say to yourself, oh, this is going exactly the way it should, and it's an indication that in another year from now, we're going to see an even bigger pop that would make sense to leave the shares. And if anything, I'm going to wait for that dip and I'm going to buy back in again. I'm going to buy in some more. The people that bought in at NKLA at $10, or people that bought FUV at 50 cents, $1, whatever it was, when you see it hit that $4.40, someone's wife is right next to him being like, you better sell that. You know what I mean? Because we just made, imagine if you had put 100,000 at whatever 50 cents. So when you say
that's different. Even at $2, if at $2 I put $100,000 and it went all the way up to $4, there's no way I'm keeping like 200,000 into FUV. I believe in them, but I don't believe in them $200,000.
Or you take out a much.
I would take my entire investment out. Right.
Yeah.
At $4, I would get rid of my entire, meaning half, meaning pull out the 100.
Yeah, you'd pull out the investment, the initial investment.
My position size is much bigger into Tesla. So that really has to hit for me, which it's
Right.
sort of doing.
Well, but
So,
that's also, it's also the percentage, it's also the percentage that that position is of your portfolio. If
yeah.
FUV is 42% of your
No, it's
portfolio,
not.
you're
It's not.
watching that thing every day. If it's like a
Yes.
10%, if it's under 10, you're like, okay, that's a play right there that could make me a lot of money, but it's not going to cripple you if it doesn't hit.
You know, obviously some people say, don't keep that much money in one company, but what if you really believe in that company?
I think when people say that, it's not because they don't believe in the company. What they're just saying is you're letting that asset ride. You're going along for the ride with that one company. You're
Yeah.
now victim to all of their market forces. You are now as invested as a worker. If it goes good, well,
Yes.
you're doing good. If it goes bad, you
Right.
might have a bad
Right.
month. But if you're holding for 5 years or 10 years, I mean, just stop looking at it. I mean, honestly, if you're not going to sell, you might want to watch it and look for opportunities to buy back in. But if there's a choice that you make when you put it in that I'm not selling it for this amount, for this amount of time, don't even look at it. And if you're
It's
really
true.
bad,
It's really hard. It's really hard since we have a finance channel, we
yeah,
always have to look at the portfolio and try to adjust
yeah,
as well.
yeah.
But it is hard not to look, but I'm not tempted to sell. Like Tesla hit $1,500 and most of my positions around 250. That's my
Yeah,
average
yeah,
buy-in, right?
yeah,
I bought a little bit more later at 800, but that was a small amount.
yeah.
So most of it's around 250 bucks. And I am not tempted at all to sell at 1,500. If it hits over 2,000, 2,500, I might be actually tempted because then it feels like some sort of a bubble that we're in, obviously. But even then, I spoke to the
That sounds a
wifey.
lot like the guy who sold Bitcoin at $600.
It does sound like a lot like that guy.
Can't do it. You can't do it. You made
You're
it.
right. You just got to go with the ride. You got
Yeah,
to go
you
for the
can't.
ride.
You can't say, oh, if it hits 2,000, because what you're saying is, like, what if it took a year to hit 2,000?
Right. No,
You wouldn't sell it
that's
because
fine. No, I
it's built
wouldn't.
on valuation. But if you take it out at
Yeah.
2,000, you never know, man. The market freaking turns on you. I've been burned more by trying to do
Yeah,
that.
it really does turn on
Buy
you
back
fast.
in, and then you're just victim to the forces. The only thing that truly irons out all of the forces is time.
Well, yeah, I see what you're saying. Obviously, if Tesla trades sideways right now at $1,500 for 8 years, that would be not that great.
It's terrible.
Obviously,
No, it'd be,
yeah.
but that's not going to happen.
Even though I made money, it would be like it just sat there doing nothing. Obviously, so basically, fear and greed play a big part in the market, and we really, as investors, especially freelancers, have to like control that in a much better way, and have to really be aware of what we're doing. And when we go to buy a stock like this, we should know when we're going to exit.
I think I figured out what your investment strategy is. Maybe you're not even aware that
Buy
you
and
do this.
hold.
No, you don't do no buy and hold. This is what
Buy and
Vitaly
sell
does.
and hold.
I'm going to tell you Vitaly's investment strategy. We'll use 1,000 shares. Okay, he buys a company and he has 1,000 shares.
Right.
What he does is he says to everyone, he announces to the top from the mountain, shouts it, I'm going to buy and hold. But secretly in his mind,
I'm selling
20% of that 1,000 shares, so 200 shares, it's a spec play. He's always
well,
like, it's
but no, hold on. I'm keeping the large stake of it, like 80%.
Right, but
yes.
what I'm saying is, if you look at N phase, you did the same thing with N phase, you did the same thing with FUV. Your strategy may just be buy as big of a position as possible as I can when it's good, when it's a good price. Take 20% of that and treat it as a spec play. Trade it and try to make money on it, buying back in on the dips, because the core position.
You know, I wish I didn't do that, but I think you've hit the nail on the head.
I think that's what you do. I think that's what you do. All I'm trying to do, and in a future episode we're going to talk about this, is saying if you have 1,000 shares, if you say you have 1,000 shares, is to leverage those 200 shares and start selling options to people.
Right.
Start selling options that are way out of the money, because then this way you'll get the fix of trading, but you're not going to ever have to lose the shares.
Right.
Something like a Lyft or an Uber, where you know that Uber is probably not going to $40 tomorrow. You know, you can sell options that are way out of the money to protect yourself and slowly make some cash on it. That, I think, is a more safe thing for Vitaly.
Maybe, and we'll do a separate episode about the options thing. But I think I wish I was much more leave it alone completely. But you're right. I do have like 10%, 20% that I always have in the back of my mind. It's never the full thing. I would never sell the entire stake. But even Tesla, when I was selling, I never never even my mind. I sold more than I wanted, and I never sold the entire stake.
Right. Because I think the reason why you're doing that is because you also understand, like, yes, this is a 10x in 5 years, but does that mean I'm just going to leave this money sitting here for 5 years and not touch it? There's got to be a way of making money in the meantime.
We hope we can make a little bit more than right in the meantime. Exactly. So
that's what I think you're responding to, or that's what I think you're it's your instinct saying, yes, this is a good thing to buy and hold. But it's kind of like we were talking about a house, right? You don't just buy a house and then leave it sitting empty for 20 years, waiting for it to appreciate so you could sell it for the profit. People love that equity part of it, but the real part that you make money is that you make money while you're building equity. And that's the idea, is once your position
You're talking about rental.
enough,
you rent the house.
you're renting it out. Exactly. So whether you're doing what you're doing, 15, 20%, treating it as a speculative play, or buying or selling, puts and calls against your shares, you're renting them out. Your portfolio's working.
Buy and hold does work, obviously. People who
Stage
held Apple.
one. That is stage one of investment.
It works. No, but it works. Okay.
Yes.
And big investors have said, listen, buy a good stock and you hold it for 5-10 years, you're going to be very happy. And they're right. If you held anything in the S&P, if you held Apple or Microsoft or Netflix, or
even right now, you're fine. You're fine. For any investor, it's going to seem counterintuitive unless you have a steady flow of cash coming in that you can continue to invest, to leave massive positions just sitting there. I mean, that's part of the reason why, when our economy slows down, part of the reason is because all the money is sitting there. Money is only valuable. Money generates when it moves. So having all that money sitting there, it's counterintuitive to an investor that understands you need to move the money. So that's why I think it's just accept that you're that way and stop feeling bad about it, and just say, if I'm going to buy 10,000 shares of something, no matter what, I am going to take 2,000 and I'm going to gamble with it. I'm going to gamble with it because I've got 80% of my portfolio supporting all those potential losses, right? If it goes up $2, it's covered everything. And that's a good way of looking at it, because if you do that with a portfolio of 5 stocks versus diversifying, you're going to learn a lot more. You're going to go through a lot more trades and learn a lot more about.
Well, look, I actually have no problem with doing what you said, like selling 10% or 20% if I feel like, okay, I've made a good profit on this. Let me keep my main position, but sell 20%. I actually don't mind that.
Mm-hmm.
What I do mind is when I have like a fear of something that is only in my mind. And that's just not, that's a bad way to invest no matter what. You should do it always going in. That's why right now I'm just making plans for every stock. When am I actually going to sell this stock, and how much am I going to sell? Like when am I actually going to sell Tesla, for example? I'm not going to sell it at 2,000. I've actually talked it over through, I've been talking to my wife for a week or two now about what are we going to do if it hits 2,000 and 2,500? Are we actually getting rid of it? It's supposed to be $1 trillion company. Let's face it.
Okay. But let's be real. If Tesla hit 5,000 tomorrow,
oh no, tomorrow, yes.
You sell the whole position.
But there is a reason for that. That's because that
was your end game.
Well, because and the upside now becomes way worse. So now your 10x becomes maybe another double to 10, but I don't think they're going straight to 15. You know what I mean? Like, I could totally be wrong. Bitcoin went straight to 20.
Right.
Who knows what happens?
But it's a currency. It's not a stock.
That's true. But yes, I doubt if Tesla hits 5,000 this year. Oh yes, I'm probably selling my entire position.
It's the speed. But
it's the speed of it.
Yeah, but keep in mind, if Tesla got up to $5,000 and he hit every one of the marks on the CEO, what do they call, compensation package, and you're only in like year 7, and it hits $5,000, and he's at every marker, you're like, well, there is no indication that he's not going to hit the other 3. I'm leaving it till we hit the 10 years, and we're going to have a party. So a lot of it does depend on the time. Time is a factor.
Yes,
time is a factor that we never talked about. We never really talk about. That's what creates the FOMO, and that's on both sides. It creates the fear of missing out, and it also creates this fear of regret. I'm going to regret not having sold now. The times that I've been able to hold it off and it pays off have always been when I, in that moment, ask myself a binary question. So if it's a question like, if I'm looking to sell a stock that has had a big run up, I just say to myself, do I believe that this will be worth even more money 1 year from now? If the answer is yes, I just close each trade.
The fear comes in like, well, if the whole market again collapses in on itself, do I really want to be holding thousands in profit and not take any? Do you know what I mean? So those two sides are always like arguing with each other.
Well, that's another factor is because when you look at your portfolio, or even if you look back at historical positions that you've had, you don't always remember what your situation was in the moment, right? Because you're
Right.
like, why did I sell Netflix at
Right.
$380? Well, maybe
Yes.
because that
I'm
was when
saying
your
that right
mom was
now.
going through. I mean, I sold it at like 384 too, and it was like now it's 500. Right? But you say to yourself, well, what was going on during that time? Maybe there was something going on. Your portfolio doesn't exist in a bubble. It's not like the portfolio you're making for your children. That
Right.
one, you don't have that FOMO with it. You like, I'm leaving it because I know by the time they get it, you right? But with
Well,
your own,
there is like my IRA. I have a bunch of. I don't even check that.
right.
I have
Because you
actually
just,
some.
yeah.
Well, I have
And
some
maybe
growth
you'll go in
stocks
there
and I
once in a
have dividend
while.
stocks, but I don't even know. I honestly, unless I'm depositing money
Yeah.
to, then I have to
Me
buy
neither.
something.
Me neither.
What's the point of me looking at it? Because I know that's a 65-year-old man that's going to be touching that stuff. So
Exactly.
some people say give your password to somebody else. So you have to go through them, and
Right,
you
right.
know, like
No,
I'm
I
not going
just
to do that. I'm not
what
going to
I
do. I don't
find
trust anybody.
what I find is those binary questions, asking yourself a binary question. So if you ask yourself, is this going to be worth more in a year than it is now? If the answer is yes, then you just say, okay, that's my decision. I'm going to still wonder about it, but that's my decision. And on the other side, if you want to sell and you're like, oh man, this thing hit $6, and you're like, I have made, 300% on this money. And then you say to yourself, yeah, it could go up to $9, but there's an equal chance that it could tank. And so you say, what will I regret more?
I did not chase it because
Right.
you don't chase a runaway train. Like people
But you
chasing
also
Tesla
know,
now.
that run up is an inflated run up due to volume. It's the
Yeah.
sheer volume of people coming in buying it that are outpacing the people selling and taking
Well,
profits.
yeah, because FOMO. There's a huge FOMO when things run up
Exactly.
fast, and Tesla might be in that FOMO bubble. Well, it might even run further.
I
Well, it
don't
might.
think so. I don't know, but I'm saying I don't think so. I think if we were at 1800, yes, but that thing hits at 1500. 1500 for Tesla is like an air mattress. It is just sitting on that number. If
It
they
is
make
sitting there.
$1,
Well, the S&P. That's a big thing for them. Yes.
I mean, and that's happening in
This
a
week,
couple of days, 22nd.
22nd. Yeah.
22nd,
I
pop
think it's
up.
waiting to skyrocket. Actually, yes. My belief is Tesla's going over 2,000.
I think it's going to go to 2500. It'll kiss it. And then
Oh,
it'll
that'd
come
be.
back down to I think it'll come back
Okay, so
down
that's interesting. If you think, would you sell it at 2,500?
at 2500. No,
Tesla at 2,500.
I wouldn't sell the whole thing, but I would sell some. If I could, I would only sell the shares that I've held over a year. Because if after a year you don't pay,
Right.
you now pay long-term taxes, long-term
Right.
capital gains, which is I think 10% or 15%,
And
not
then
the
again, so
37%.
there's that thing that, if it's short-term games, you're paying 30% or whatever, 35% on
Yeah.
taxes, which is kind of crazy, honestly.
But if you're in the long haul and you're saying I'm going to hold it, cool. But between that time you buy it and all of that, there are a lot of ups and downs that you can ride. It's just a matter of how much
Right.
risk. What do you want to do? What do you want to do with the money? If the money's going to come out, you got to have a plan for it. It can't just be, let me just pull it out. Have a plan for it. So
No,
that
no,
you
you're right.
have a plan
That's the
for
most
it.
important thing. If you have to have a plan, if you're going in saying, look, I'm going to sell whatever, 5, 10 shares of Tesla at 2,500, that's your plan. Stick to it, honestly. And then what are you going to do with it? Are you going to just take it out and go
Right.
on a
You can go
vacation?
shopping, you can go vacation,
That's
you're going to
dumb.
put in something else.
But my
Yeah.
point is, people take profits only when you've decided that you should, and not out of fear and greed. Those are the worst times to
Yeah.
sell or buy, either way.
Yes. And number two, the only thing I would add to that is when you're in that moment, ask yourself a binary question that will give you the yes or no answer to decide what to do. And the other thing is, if you do decide to sell, know exactly where you want the money to go. So you don't have time to regret it. It goes right into the next thing and you keep going.